What's up, guys? Welcome back to my channel. I am Kyle Chasse. Today up, we got some amazing news, and at the end, I hook you up with a free dollar cost averaging or get rich quick Bitcoin calculator. Check this out. Peter Schiff again on Twitter, talks crap about Bitcoin and says gold is better. But is that right? I'll show you. And we got the federal chairman Neil Kashkari says we're gonna have a long, hard road ahead. Is a V-shaped recovery coming? Also, ransomware hackers switch from Bitcoin to Monero. Is Monero a good investment? I'll let you know. And finally, I got this Bitcoin calculator, dollar cost averaging, where I show you how you can make 7,000% gains during this next bull run. Check it out. All right, everyone, let's jump into it. All right, here we go. We got CoinGecko, and the price of Bitcoin is up a little bit today. We got 68.51, and it's a little bit of good news. However, not up by much, 1.5%. And the market is looking relatively neutral right now. It's preparing to do something. All right, here we go. Next up, we got... Oh, Peter Schiff, this guy, he talks so much about Bitcoin and crypto. Like, for a man who apparently hates it, he sure does love to talk about it. I just feel like he must be threatened about it. All right, well, let's talk about this article. Bitcoin or BTC hodlers about to learn expensive lesson. Peter Schiff. Look at this guy. Like, what? Okay, so the vocal Bitcoin hater and CEO of Euro Pacific Capital, Peter Schiff, has yet again taken to Twitter to pour critiques over the flagship cryptocurrency. While standing against the cash printing recently implemented by the Federal Reserve amid the financial crisis caused by the coronavirus breakout, Schiff is promoting gold and while slamming Bitcoin, unlike other major influencers such as Robert Kiyosaki from Rich Dad Poor Dad. I actually really like Robert Kiyosaki. He was one of the role models for myself as a teen. I read Rich Dad Poor Dad, and it was a great book. Like, it really teaches you a lot. So if you have not read that, I suggest that you go out and do that. And Mr. Robert Kiyosaki has been speaking very highly of gold and Bitcoin lately, and how to kind of prepare for this economic crash that we're about to go through. I recommend you check out some of his stuff. Again, he was highly influential to my development, and I'd like to thank you, Mr. Kiyosaki. So anyway, look at this. This is his Schiff's tweet here, trying to explain the concept of money to a Bitcoin hodler. At least he says hodler. That's great. See, he even likes the language. Like he even likes the culture. Yeah, that's right, Schiff. Hodler. Trying to explain the concept of money to a Bitcoin hodler is like banging your head against a wall. That's how I feel like when people are trying to explain Bitcoin to Peter Schiff. These guys are about to learn a very expensive lesson in economics and gain a new appreciation for the age-old saying, easy come, easy go. Right, Schiff? You are just jealous. So, gold about to moon, BTC will crash back to Earth. In a previous tweet, the Euro Pacific Capital CEO stated that despite BTC growing more than gold recently, this states the state of things is likely to change in the next few years. Gold will go to the moon. It could. I'm not going to argue against the case for gold. In the next screen that I show you, there is an argument for gold versus Bitcoin versus fiat. But anyway, I'm not going to argue against it because I think that gold probably is a good safe haven asset. It's been that way for thousands of years, maybe even longer. And, I think it's a safe hedge against what's about to happen. However, I don't think it's the best hedge against what's about to happen. Recently, Peter Schiff took part in a VC investor and vocal BT supporter Anthony Pompliano podcast, Pomp, Off the Chain. In it, Schiff suggests that Bitcoin might do well over the next few years. You bet your damn ass it will. Eventually, he stated, BTC is bound to drop heavily. That's obvious. Schiff, obvious. I mean, this is like, okay, Good job, Chef. You've watched the history of Bitcoin over the last 11 years. You observed the trends of a bull market with a correction of like 80%, and you've just stated the obvious of what's going to happen. Yeah, we're going to have little mini bubbles. Price is going to run the hell up, and then it's going to have a steep correction. It's going to do that for many years to come until it becomes massively adopted and things get stable. Prior to that, Peter Schiff stated that Bitcoin attracts only mentioned. Sorry. Bitcoin attracts only the attention of speculators, since nobody else would buy a volatile asset, in the hope that it may become a safe haven in the future. His conclusion was Bitcoin will never become a safe haven. I disagree. And also gold has been fairly volatile as well. Not as volatile, but it has been anyway. What Peter doesn't recognize is that Bitcoin is such a new emerging asset class, right? Like, imagine if you just mined gold for the first time and nobody really knew about it, and people weren't really sure what was going to happen with it, and you just try to sell it to somebody, and then they wanted to buy it, right? But when gold was a very small market cap, I'm sure that it was not a stable price, right? It probably was much more fluctuating than it is these days. Because why? Because now it's become massively adopted. It's found its kind of peak adoption. You know, everyone who wants gold has gold, more or less, and and that's it. Like, the whole world has that infrastructure already built. We don't quite have that yet for crypto and Bitcoin. All right, now some some great responses to Mr. Schiff's tweets. Trader Crypto responded to Peter Schiff's anti-Bitcoin tirade, accusing him of being a short-sighted, and claimed that deep in his heart he might regret not buying Bitcoin when it was worth $1. So, in response, Chris from Crypto says, you already learned the most expensive lesson possible. The opportunity cost of not buying Bitcoin at $1 when you heard about it. Missing out on a 7,000x must have been painful. Ouch. And that's what I mean. I agree with Chris here. Like, that's what I think is up Peter Schiff's butts. Is just he's just bitter because he knew about it. He thought it was magic internet money and no one would ever buy it, and then it went the hell up, and then he's like, damn, I wish I would have bought it. Because I guarantee you, if Schiff had bought Bitcoin at $1, he would not be singing the same tune he is now. He would definitely be praising Bitcoin and going about telling everybody. But the fact is it got a little too expensive for Mr. Schiff. He feels it got a little too late. But the thing is that he's not too late. You're still very, very early. And if you're watching this, we are still very early in crypto and Bitcoin. I strongly believe that Bitcoin will hit a value of 1 million, 2 million, 3 million, somewhere. You know, it could some estimates even as high as $10 million for one Bitcoin. We have such a finite supply, right? So anyway, like so anyway, that goes into the next response from Carl from the moon Carl. So he says, in fact, I learned a lot about economics from you, Peter, in the past few years. Much of this information about money that I learned from you helped me understand the value of Bitcoin when I later found out about it. Please reconsider your view on BTC if you're wrong. And that's a good point. Like, and not I mean, okay, like Carl says a good modest response. What if you are wrong? I believe strongly that he is wrong. You know, and why would it hurt the guy too? Like, why does he hate it so much? Why, like, what is his agenda against Bitcoin? Why doesn't he just, like, you know, he has some money, just put some money in Bitcoin and, like, shut up? You know, like, why are you out there trashing it? Just shut up, Peter, buy some Bitcoin, jump on the bandwagon, just, you know, whatever. Just, you don't help, you look like an idiot, like, and you're just going to be wrong. In fact, let me just show you. So Schiff is all about gold, right? He loves gold. That's what he talks about. He doesn't like that the Fed's printing a bunch of money, which is great. I agree. However, he makes the case that gold is so much better than Bitcoin. However, let's take a look at this. So Van Eck, which is a massive fund, they have about $50-something billion under management, which is very, very large. It's like a third the size of Fidelity, more or less, but it is massive, right? And they've got a bunch of investment managers and things like that, and they manage a lot of people's money. So Van Eck made this report called the investment case for Bitcoin, right? And they distributed this out to all of their financial managers. And if you go down to this slide number 7, it talks about Bitcoin has the potential to become digital gold. So this is a little chart here, and it tells you, and it compares gold to US dollar or any government issued fiat versus Bitcoin or crypto. And so you have fungibility or interchangeability, high, 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 right? Okay, non-consumable, high, high, high. Portability, okay? Here's gold. You have moderate, but you and actually for fiat, I would actually argue that it's moderate because it's very difficult to take more than $10,000 to a different country. So, but Bitcoin, high. You can walk through any border at any country in the world, and they could ask you if you have $10,000 on you, and you could say no. But you could have, you could have $10 million of Bitcoin on a hardware wallet or a piece of paper. Portability, high. Durable. Well, gold is definitely durable. We use it in space. Government issued dollars. Well, it's somewhat durable. Yeah, that's why it's moderate. But I could tear a dollar easily. Could write out a dollar. In fact, I live in Thailand, and sometimes they won't even take my dollars because they have like a piece of ink on it or something. Bitcoin, high. Highly divisible. Well, Bitcoin, not really. Gold, not really. You could, but you have to melt it down or like chip off. It's not really that easily divisible, right? I would say dollars a little bit more, but Bitcoin, high. Secure, cannot be counterfeited. Gold, well, I've seen counterfeit gold before. So yeah, there definitely are counterfeits going around. I've seen also the counterfeit bills. I've never seen a counterfeit Bitcoin. Why? Because encryption secures it, and we know that it cannot be done. Easily transactable, low for gold. Like you can't walk in anywhere and pay in gold. Fiat, yes, high. Crypto, Bitcoin, high. Scarce, predictable supply. Bitcoin or gold, yep, it is fairly scarce. And then however, if you get down here, decentralized, it's not decentralized at all. Scarcity of US dollar is, this should say, extremely low. And Bitcoin, high. Like right now, we think that approximately 6 million Bitcoin have been lost forever, and 21 million will ever be produced. That leaves us with 15 million Bitcoin ever circulating on the planet. Right now, we have, I think, about 12 or something like that. So it's incredibly scarce. There's something like 33 millionaires on this world, in this earth. That means there's less Bitcoin than there are millionaires, which means that not even every millionaire on this planet can have one whole Bitcoin. Very, very scarce. Government issued, low, high, low, great. Decentralized. Gold is very centralized. It is held by most governments and banks. Same with the Fed, and high for Bitcoin. Smart, no. Gold is dumb. Dollars are dumb. Bitcoin is very, very smart. So when Schiff has an argument against why gold is better than Bitcoin, well, I think Van Eck disagrees. I disagree. And this is a pretty good case for that. Next up, America should be ready for 18 months of shutdown in a long, hard road ahead, warns Fed's Neil Kashkari. So Neil Kashkari is the chairman of the Federal Reserve Bank of Minneapolis, and he has a perspective which has been aligned with what I've been talking about recently. So Kashkari, while acknowledging the downside of what a prolonged shutdown could mean for the economy, said the U.S., barring some healthcare miracle, is looking at an 18-month strategy of rolling shutdowns based on what happened in other countries. Looking ahead, Kashkari doesn't envision a quick rebound for the U.S. economy, which has already suffered more than 16 million job losses in the past 3 weeks. That is tremendous. So I think in the Great Depression, 1929, there was something like 15 million jobs lost. So we're already ahead of that, and we have much more to go. This could be a long, hard road that we have ahead of us until we get to either an effective therapy or a vaccine. He said, it's hard for me to see a V-shaped recovery under that scenario. Again, going back to my previous videos and what I was talking about Tom Lee from Fundstrat, how he thinks we're going to have a V-shaped recovery, which is not likely at all in my opinion. This guy, which is chairman of a Federal Reserve Bank, would seem to agree with what I've been saying. So that's what I wanted to point out here, which means in the case of the article I was reading the other day when we talked about a V-shaped recovery, so right now in the speculation in stock markets, they're doing pretty strongly because they believe that we are going to have a V-shaped recovery and the economy will go back to normal fairly soon. Well, I've been telling you that I don't think that's going to happen. I've been giving you reasons for it. Check out my other videos. But now we have someone who is very, very high up in the monetary world or fiat world, and this is his opinion. So it agrees with what I've been talking about, which means that we're probably not going to have a V-shaped recovery, which means we're in for a lot of pain and suffering ahead, which means that we're going to see a massive drop in the stock market. And because I think that crypto and Bitcoin are right now correlated to traditional markets, we're also going to see a big dip in the Bitcoin market. Now, just to be clear, like I'm actually very, very, like I love Bitcoin and crypto. That's why I'm here. I actually was all in Bitcoin. I said screw you fiats in 2013. I went all in on Bitcoin, and I still have a majority of my assets, like 90% in Bitcoin, and 9% in investments, and 1% in whatever money I need to survive. In the interim, right? So I am huge believer in long-term value of Bitcoin and other cryptocurrencies. But I am trying to be realistic right now and just help you guys prepare for the things to come and what my opinion of that is. So this last article that I'm about to go into talks about Monero. And like I just wanted to mention it because I think Monero is an awesome coin. Like I really like Monero. Why? Because it has a privacy feature that Bitcoin does not. And every time I've talked to anybody that is in law enforcement or talks to three-letter agencies, everybody says that as soon as a trail leads to Monero, the investigation just goes cold. So Sodden Akabi crypto ransomware switches from Bitcoin to Monero to hide money trail. A kind of ransomware, a malware that encrypts user data and asks for a ransom to restore access to it, switched from Bitcoin to Monero to better protect the hackers' identities. So if you don't know what ransomware is basically where some hackers will create a malware or a virus that basically someone in a corporation or bank or whatever will open up like an email, click a link, whatever, and it installs this ransomware where it basically encrypts the entire computer and system. And the only way for it to be unlocked is usually they'll get a message from the hackers saying, hey, you got to give us this much money. And if you do, we'll give you back access to your systems and things like that. This is very prevalent in the world. And what they're doing now is these hackers are switching to Monero because they want to protect their identities. So here you can see, this is from the authorities here. They say, since a suspect used a combination of Tor and privacy coins, Tor is a internet browser that's basically runs on an onion network, which will bounce around the IP addresses to many different nodes before it actually connects to the destination, hiding the user's location. Unlike a traditional IP address, which gives the address of the user, this will hide the user's address. So that's Tor. So he says, Tor and privacy coins. We cannot trace the funds. We could not trace the IP addresses, which means we hit end of the road. Whatever happened on the Bitcoin blockchain was visible, and that's why we were able to get reasonably far. But with Monero blockchain, that was the point. That was a point where the investigation has ended. So this is a classical example of one of several cases we had where the suspect decided to move funds from Bitcoin or Ethereum to Monero. So that's pretty much all I wanted to say. But like, I just think that Monero has incredible value and it's undervalued, and I think that it will do really, really well in the future. So when I think that's not investment advice, but it's definitely something to consider. It is pretty. It is kind of controversial because due to government pressure and things like that, Monero was delisted from a lot of exchanges, which means it's not as liquid. But I do believe in the fundamental value of it, and I think that over time, as people want to respect their own privacy more, they will realize the value of Monero, and it'll take a long, long time for Bitcoin to get to the level of privacy that Monero has currently. And lastly, so this is something I made for you guys here. This is this is my get rich BTC calculator, buy the dip or dollar cost average. So basically, I wanted to create this for you guys because a lot of people ask how much you should invest in Bitcoin or crypto. This will work for Bitcoin or any cryptocurrency, really. And with all this negative news that we've been getting, and how I believe the markets are going to dump, you should be prepared for it, and have a plan in place. Now, a lot of people get very, very emotional when they're investing in crypto, and they get glued to watching the prices and get obsessed about it. A much, much better way to invest is what's called dollar cost averaging. Dollar cost averaging is where you take, basically, you figure out what you can budget aside for investing. So let's say that that you make $2,000 a month, and your rent is $1,000 a month, and you need $500 for things like whatever, blah blah blah, gas, food, blah 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 blah. Or let's say that you need $600 a month for that. So you have $400 left over that you think you could either save or invest. So a good strategy might be, instead of just trying to buy the dip, a more rational and proven strategy that's more beneficial is what we call dollar cost averaging. Now that is where, like, let's say you have that $400 of expendable income, and so you make a plan where you say every Sunday I'm going to buy $100 worth of Bitcoin. Okay, no matter what the price is, you're just going to do it religiously and invest in that strategy. This is, there was a study done in 2018, I believe, where they looked and they said that in the course of the year, there was only 10 days of the entire year that you could have bought in at that would have performed better than dollar cost averaging. So it makes much more sense to dollar cost average. So I made this calculator for you guys to see, because a lot of people ask how much they should invest, and they don't really get to visualize what that investment would return, right? And so I made this handy dandy little calculator for you. So let's say that today is 4/14. So how you use this calculator is anywhere in the yellow you can change numbers. Everywhere else you don't need to touch, right? And so let's say today's date is 4/14/20. Okay, and the price of Bitcoin right now is 68.37. So we go here, 68.37. Boom. And you spent $100. So right now, if you bought it today with $100, your Bitcoin holdings would be 0.014 Bitcoin. That's how much Bitcoin you would have. And here it says your average Bitcoin buy price is 6,837 because you've bought one time. Now let's say next week, let's see. So the date next week would be 4/21/20, and we start to see we start to see the way the market's going. I predict that they will. So let's say that next week it drops down to 5,500. Okay, and you spend your $100 because that's what you plan on doing, and sorry about that. Okay, and so now you have you've now an additional 0.018 Bitcoin, and you have total now 0.0328 Bitcoin. And because the price was lower than the price that you bought it at this next week, now your average Bitcoin buy-in price is 61.69. Okay, moving along, and let's say that the next week, for 28/20, let's say the price we really start to feel some pain, and now we're sitting at 4,500, and you spend another $100. Sorry, I will fix this. There you go. And now you bought another 0.022 Bitcoin, and now you have 0.05 Bitcoin and some change. And your average Bitcoin buy price is 56.12, right? Okay, so now let's say that we go another week, and I don't know what the date would be, but it'd be somewhere around 5/4, maybe, like something like that. Okay, and let's say now that we're going to dip, like Arthur Hayes says, maybe we go to 3,000. So let's just say that in there we go to 3,000, and you buy another $100 worth, and now you just got yourself another 0.03 Bitcoin. So now you're at 0.088367 Bitcoin. Okay, so let's see. Now your total investment is $400. This is how many Bitcoins you have. Your average buy price is 4,959, and this is what I did down here. So let's say that the price of Bitcoin goes to $10,000, which it will soon. Your Bitcoin holdings in dollars is now $884 from the $400 you invested. Nice, right? You made 121% gains already, and 1.21x. Now we can go down here. Let's say that by the end of the year we hit all-time highs, And now your $400 investment is now worth $1,767, and you've made a 342% gain. That is tremendous. Try doing that in any other asset class. Gold, nope, don't think so. Not going to happen. Okay, now I believe that at the end of the next bull run, we're going to be anywhere between $250,000 to $330,000. So your $400 investment, now remember, like, the end of the next bull run, or the peak of it, is going to be somewhere, I believe, like 1 year after the halving, so maybe 13 months from now. So carry this out, and you can just go in here, you can go right, you can just go insert a row above, boom, and you got more rows, and you can just do this as much as you want. You can go, boom, insert 4 above, do, and it goes, and you can just keep going and keep going and keep going and keep going. So if this is all you spent was $400 in the next few weeks, and the price goes to $250K, now your $400 is worth $22,091, and you've gone up 5,423%, or a 54x. That is freaking tremendous. Okay, now let's say that you have a bit more money to invest, right? Okay, so maybe we change this to $1,000. Boom. And can we just copy this down? Yep. Okay, so now you've invested $4,000, and you have almost one whole Bitcoin, 0.88367 or 36. And let's see. So, and over here you have this nice little chart too. It shows you $10,000, $20,000, boom. So your $4,000, if it goes up to $350,000, turns into $300,000. Actually, 309, or a 7,632% return. Tremendous. And this is going to, like, sooner or later, this is going to happen. I promise you. Well, I can't promise you, but I kind of do. So basically, check this out. Just these returns here, like, these are unprecedented. You can't get that from anywhere else. Any other investment, any other asset class, not going to happen. Right? So this is what I encourage you guys to do, is create something like this. Use this calculator. I made it for you for free. And just, keep putting things in here. Like, just keep putting in there. If you can invest more, imagine this, 2,500. Boom. And now you've got, so for a $10,000 investment, at these numbers, you've got 2.2 Bitcoin. That $10,000 investment it could be at the end of the next bull run, which is like a year and a half, it could be something like $500,000. Huge. Here, this adjusts as well for you. Now, let's say that, like, you were to do this, and, well, I would need 52 of these cells. That would be a lot. But, like, let's just say that, boom, just did this here. Just to show you some more weeks. Okay, so I would need to fill out these. But let's just say that, like, okay, just for shits and giggles, let's just put these numbers in here. Let's say that you did that. Okay, now we're getting really crazy. If you were to have $30,000 invested over some time, and obviously these numbers would change, probably be higher than that, but you'd have like 8 Bitcoin worth $3 million, potentially. So, you can play around with this. I made it for you, free. Like, enjoy it. It would be great if you like and subscribe. Please click that bell. That would be appreciated as well. Thank you so much for tuning in, guys, and I'll see you in the next video.